Hey everyone, hope you're doing well. I wanted to create a quick video on the home buying process. This is brief, it's not comprehensive, but I thought it would give you guys a good idea of kind of the overall home buying experience. All right, so if you're like 6 to 12 months out from buying a home, but you're browsing around, you're looking at houses in the area or a piece of land in the area, whatever you're planning on buying, um, but you're not ready to make a purchase yet, it's a good idea as a first step to get a pre-qualification letter. These letters are really informal. It's a soft pull on your credit. It won't impact your credit at all. A pre-qualification letter is a very informal letter that you can fill out online or with your lender. You basically provide info like estimated income for the year, a kind of a estimate on your credit score, where it is roughly, and the lender or whoever you're filling out the pre-qualification for will give you kind of an estimate on what you can generally afford. This pre-qualification letter is good for about 60 days. It's not recommended that you use the pre-qualification letter when purchasing a home. It's a little bit too informal. Once you're serious about making an offer on a house, maybe you're a month away from making an offer, maybe you're a week away, maybe you just found a house right now online and you really want to purchase it or make an offer on it today or tomorrow. That is a great time now to talk with your lender and get a pre-approval letter, not a pre-qualification letter, but a pre-approval letter. A pre-approval letter is a much more formal letter. It's good for about 60 to 90 days, but generally, in my experience, people are getting pre-approvals right before they make an offer on a house so that they have the most up-to-date information about their financials and what the lender is most likely going to loan them. The lender will be asking things from you like bank statements, W-2s, 1099, your debt obligations, if you owe student loans or if you have a car loan. And once they calculate all of that information, oh yeah, including a credit check as well. They'll do an actual poll on your credit to see exactly where you stand. And once the lender calculates all that information, they will give you a pre-approval letter. On that letter, it will tell you how much they're willing to loan you. And you can use this pre-approval letter when making an offer on a property. If you haven't already found a realtor to work with, now is a really good time to work with a realtor when making an offer on a property. You can get a pre-approval letter before working with a realtor. In most cases, in my experience, people already know the realtor they want to work with before getting a pre-approval, but it doesn't matter which way you go about it. Having a realtor is a good idea for a few reasons. I just want to list several of those reasons. First of all, paperwork and legal protection. There's a lot of complex transactions in real estate, and the realtor is going to help you navigate through those, and it will make your life a lot easier. Also, realtors are good at negotiation. Hopefully they'll be able to get you a good deal. Or when it's a hot market, hopefully they'll be able to make you an offer on a property that is competitive, but hopefully you're not overpaying for. The realtor will also help you with things like home inspections and other due diligence material when you're in escrow. They'll help schedule inspections, they'll help review reports, they'll help negotiate repairs and credits with the seller. They'll also help with other deadlines associated with the transaction that will hopefully reduce your legal risk. Obviously, a realtor is supposed to be a professional when it comes to knowing the market and guiding you through the market. They understand the pricing trends, the neighborhood details, and they should be able to accurately guide you on what price to make an offer at. They also have access to off-market properties. A lot of properties are not on the MLS, so they won't show up on Zillow. And having a realtor that knows the area well will often know of homes that you can purchase that are not available for everyone's viewing. And then the last thing I want to mention about having a realtor is for the buyer. If you're purchasing a property, generally as of today, it's still usually free for the buyer. Now, there's new rules in real estate which actually require the buyer to pay for their agent. But generally, still speaking, when you make an offer on a property, the buyer is going to ask the seller to pay for the buyer's obligation to pay the buyer broker, which means that the buyer doesn't have to pay. Usually this is still the case, although sometimes the seller won't pay the buyer's agent, in which case the buyer does have to pay their agent. But generally speaking, the seller, in my experience, has still been covering the cost of both the agent on the list side and the agent on the buy side, from what I've been seeing. So during this 6 to 12 months of browsing through a property and then getting close to actually getting a pre-approval and then making an offer on a property, you're going to want to avoid doing some things when it comes to your money. Number one is that you're going to want to be cautious on making large purchases, whether it's buying a car or going on an expensive vacation. You want to make sure that you're not taking out another loan. You're going to want to make sure that there's like no weird large withdrawals from your savings account, or that you're not, opening up a new line of credit. You're going to want to make sure you're not co-signing on people's loans. Of course, you can do all of these things. No one's stopping you from doing them. It's just generally recommended that you don't do these things, because the lender is wanting to see the least amount of debt possible and the most amount of stability when it comes to your finances, all the way up until actually the close of escrow. If the lender is seeing something funny with your finances, or they see that you're taking on too much debt, they're going to be less likely to loan you money for the offer on the house. Okay, once you and your realtor submit an offer and it's accepted, within the first few days of your offer being accepted, you're going to be submitting what's called an earnest money deposit. This is generally about 3% of whatever you made an offer on the property for. It doesn't have to be 3%, but it's generally around 3%. Once you submit this 3% of EMD, earnest money deposit, you'll also be getting paperwork from the sellers, and you'll be reviewing all the documentation about the house to make sure it's up to snuff with how you're hoping it would be. And escrow and title are working on your behalf to make sure things are working smoothly. Title is making sure that there's no unpaid property taxes, there's no liens, judgments, or claims that could affect your ownership or transfer of title. And then home inspections and appraisals are going to be ordered. So a couple of notes about home inspections and appraisals. Okay, when you get a home inspection, they're really thorough, and there's a lot of things that come back in terms of repairs on the house. Just because there's a lot of repairs that might show up on the home inspection report doesn't necessarily mean it should be alarming, but you should go through it with your realtor and decide if it's something that will stop you from moving forward in escrow, or if it's something that you would like to try and negotiate with the seller. If you think that the repair list is too much to handle, you're more than welcome to opt out of escrow at this point, if hopefully on your offer you wrote that your offer is contingent upon the home inspection. There's a couple ways to negotiate this with the seller if you decide that you would like the repairs to be fixed. Number one, you can ask the seller to fix the repairs. The seller is not obligated to fix those repairs, but generally, in my experience, sellers are often willing to work with a buyer to fix the repairs. The other way you could go about it is that you can ask the seller to give you a credit in the form of X dollar amount so that you can fix the repairs after the close of escrow. These are generally the two ways that it's done. If you and a seller can't come to a good negotiation over this, and you can't afford to fix the repairs, or you feel too uncomfortable, you're allowed to opt out, as I mentioned. Okay, so one thing on appraisals. If an appraisal comes back lower than what you made an offer at to purchase the property, there's a couple things that can happen. Okay, one is you can pay for the difference, or two is you can negotiate with the seller a price reduction. Okay, so for example, if you signed to purchase a home for $1 million and the appraisal comes back and the appraisal says the home is only worth $975,000. Okay, that means that the lender is only going to loan you money for the $975,000, not the $1 million that you made an offer at. That means that there's $25,000 that you, the buyer, need to fork up as an extra amount for your down payment. A lot of buyers are already stretched thin when making a purchase on a property and might not have the extra $25,000 in cash. So they can negotiate with the seller to do a price reduction, but they can also opt out at this point if they wrote on their offer that the offer was contingent on the appraisal. Okay, so after the appraisal, we're getting close to the end of escrow, hopefully, and the final loan approval and the keys to your property, but there's still a few more things that are needing to happen. Okay, so when your appraisal comes back, the lender, hopefully soon thereafter, will be issuing you a conditional approval on your loan, which means that your loan is pretty much guaranteed to go through, except there might be a few other things that the lender needs from you for final approval. Once it's finally approved, it's called a clear to close, and that means that you're clear to close for escrow. Before the close of escrow, you will do a final walkthrough on the property where you and your realtor will inspect the property one last time to make sure everything looks how it should be. And anything that seems off, you can talk to your realtor about and get that fixed before the close of escrow. On the day of the close of escrow, the lender will do some final last checks on your finances to make sure there's no red flags to be found. Again, you want to make sure that during this period, you're not like switching jobs or taking out massive amounts of debt, because if there's anything that the lender sees as funny, they can still decline your loan at this point. So you want to make sure all the way up into the close of escrow that you're very stable with your finances. But if everything's good to go, then the lender releases the loan funds to escrow. Escrow distributes those funds to pay the seller, to pay off closing costs, and title records the deed with the county recording office. At this point, congratulations. You are in your new home, you're the legal owner, you get the keys to your property. Recording can take from about 1 day up to a few weeks, depending on where you live, but no doubt, once the close of escrow happens and the funds are released to the seller and everything is complete on that close of escrow day, you are the legal owner, even if the recording of the deed doesn't happen for up to a few weeks. All right, guys, that is everything for the brief overview of the home buying process that I wanted to convey. I locate, interview, and refer people like you to realtors in your local area or where you want to move throughout the country. If you'd like to know more about that, you are free to contact me at any point. You're welcome to follow me on my Instagram at Kyle Thomas Ingram, or go to my website, www.kylethomasingram.com. I hope you guys have a great day. Thanks.